Let's bring in a man that knows Europe just as well as anyone. It's Jens Nordvig, Exante Data founder and CEO. Jens, this is where we want to start this morning. So many of these stories are well known. Europe struggling, the US flying. And a question we've asked for the last couple of days, how well priced are they in your world in foreign exchange?
Yeah, so in the introduction, you talked a lot about all these signals of optimism in the US that have sort of been around for a while, and it's no surprise that we have a pretty big stimulus package coming out. But in Europe, I think we're still waiting for the all clear, right? The vaccine rollout has been disappointing, to say the least, so far. And we even have spikes in cases here in the middle of March in many countries, right? So we don't have the all clear, and we certainly have not had the reopening yet. So I think in terms of us really pricing aggressively sort of a global reopening, that's still something that's probably going to happen in the next 1 to 2 months. So I think in terms of the catalyst for further lift to global risk assets, it's kind of come from getting confidence that the vaccine is working in the UK. It's starting to work in the overall EU. And these spikes that we're having in Latin America, even in India, are going to get under control as we get vaccinated and perhaps take other measures to get through those peaks. That's going to be the final catalyst that the big global reopening is here. It's not just in Israel and the United States that we're heading in that direction, but it's really in most countries. And that's what we're waiting for here still.
You would think that would lead to profound dollar weakness, Jens, but of course that complication has been introduced at the start of the year that Europe's really struggled, and the issue around the dollar has become a whole lot more complex. Do you think we've seen the move from 123 to 119? Was that it? Was that the complicating factor? Europe vaccine struggles, euro dollar 123, 119, or still more to go?
Well, I think you're right to say that the dollar outlook is complex, right? Because we had a period where it was about global growth looking better, and it was about the U.S. current account deficit widening dramatically as we had a lot of spending in the U.S. as opposed to other countries. And we had a period where interest rates in the U.S. were just locked at zero, and there was no speculation about any change to that, right? And now we've had tremendous volatility in the U.S. yield curve. So we have some offset to those dollar negatives, and we're digesting it. We have a pretty important meeting at the Fed tomorrow where we're going to get into that more. So we're sort of in a period of indigestion. I would say also like systematic traders in the FX market got very, very short dollars going into this year, and they're in the process of reducing that short exposure. And you sort of asked, are we done with that correction from 120 something down to 119? It could be that there's a bit more trimming in position to be seen, and we can have a further leg down in the euro. And we could even have a situation where that kind of fits with the news cycle where, okay, we have that positioning adjustment, the news is still negative, and then getting into April, the news will actually start to look better. April is really important for Europe because we have a huge BioNTech plant that is going to start to produce a massive amount of vaccine in early April. So from that perspective, that could be really important too.
You said, Jens, that we have a very important Fed meeting that begins today and we get the press conference tomorrow. How could this shift the narrative going forward?
Yes, so I think that this meeting is really important, right? Because in August, they had the formal announcement of the average inflation target framework and how they define liftoff was communicated thereafter. And then market have been guessing what does that really mean in terms of what the Fed wants in terms of inflation, but we don't know for sure. It's not they've said that overshooting 2% mean we would like to have 2.1. So is it 2.1 or is it 2.5? We have to figure out, okay, how much overshooting is the Fed actually comfortable with? And I think that's what we're going to try to sniff. And if we get an impression that it's substantially more than is already priced, that's going to be the catalyst for the rate market.
Jens, I've got to go back 8 years to my book of the summer 8 years ago, which was your book, The Fall of the Euro. It's still the best description I've seen of the modern euro. How is Lagarde doing? How is she doing, to take one of your chapter titles, The Theory and Practice of the ECB? Give Lagarde a Nordvig report card.
Well, so when I wrote that book and when you read it, like the key missing bit in the euro construct was that there was no sort of common fiscal capacity. And we've created some common fiscal capacity here over the last year. The big surprise of the second quarter was we had that EU recovery fund that we call Next Generation EU now. And don't forget, Lagarde used to be a fiscal policy maker. Right now she's transitioned to be a monetary policy maker. But she's been talking about that. What can she do on the monetary policy front? She can give the market confidence that they're going to be there with bond buying in the transition phase. But in order to really generate a spike in inflation expectations, similar to what the Fed is trying to do in the US, they really need the fiscal impulse to be a persistent one, as opposed to be these like temporary waves that are then met with austerity. So it's a fiscal issue. She can do her side by having persistent bond buying, but the heavy lift is going to be fiscal.
Jens, always great to catch up, sir. Good to see you. Jens Nordvig, Exante Data founder and CEO. And Tom, that book was published, 8 years ago, 2013, late 2013? Dated. Look at it now. Would you have said back in 2013 we wouldn't see a single rate hike through the cycle from the ECB?
Oh, no. I mean,
that's what we got.
The book was shockingly prescient as a historical construct and also looking forward. And John, no